All right, let's get right into it. Today, we're talking about something I know you've all been feeling. A question every crypto watcher has been asking: why has Bitcoin's price been so, well, weird? It has these huge rallies, gets everyone hyped, and then it just grinds down, completely stuck in a rut. So let's figure out what's really going on.
I mean, if you've been staring at the charts, you know exactly what I'm talking about. We see these powerful surges, these moments where it feels like we're about to break out, and then, poof, they just fizzle out. It is so frustrating, it's confusing, and honestly, it just feels like something is fundamentally off. And you are definitely not alone in feeling that way.
This quote, seriously, it just nails the feeling, doesn't it? This isn't just about numbers on a screen. For a lot of people, this has real-life consequences. The price action feels personal. But what if it isn't random at all? What if something else is going on behind the scenes?
And that's really the core idea we're going to dig into today. This isn't just your typical market correction or a simple loss of momentum. No. The evidence is pointing to powerful structural forces at play, cold, hard market mechanics that are literally pinning Bitcoin's price in place.
So what is the cause? What's the deal here? Well, it looks like the smoking gun points to one massive, looming event in the options market, and that event is a colossal options expiry scheduled for December 26th.
Just take a second to really look at that number. We are talking about a notional value of over $23 billion. To put that into perspective, that's more than 1% of Bitcoin's entire market capitalization, all tied up in this one single event. It's huge. Now, here's where it gets really interesting. You can see this huge imbalance. We've got almost 200,000 contracts betting the price is going to go up, but only about 73,000 betting it's going down. That's what we call bullish asymmetry. The market is just overwhelmingly positioned for a higher price. So, why aren't we seeing it? Okay, so this table breaks it all down for us. That put-to-call ratio of 0.38, yeah, that just screams bullish. But look at that last line, max pain price. This is where the story gets really wild. This is the price point where the most options expire worthless, meaning it's the point of maximum profit for the dealers who sold them. And that price, around $96,000, acts like a giant magnet.
So how does that price magnet actually work? Well, it's all because of a mechanism that traders call a gamma cage. It's this invisible force that's been trapping the price and causing all of this frustration. Let's break down exactly how it works.
Okay, so what on earth is gamma? In the options world, it's absolutely critical. Think of it this way. It's the rule book that tells the big dealers, the people on the other side of all those bets, exactly how much Bitcoin they have to buy or sell to keep their own books balanced as the price wiggles up and down.
All right, this might sound complicated, but the lemonade stand analogy makes it super easy to get. So imagine you're running a lemonade stand, and you sell promises to give kids free lemonade if the price of lemons skyrockets. Well, to protect yourself from going broke, every single time the price of lemons ticks up, you have to run out and buy more lemons to cover your promise, right? Gamma is simply how fast and how many lemons you have to go buy. It's just a measure of your hedging activity.
And that is how you build the cage. Because so many people bet the price would go over $90,000, every time the price rallies and gets close, past 89K, bam! The dealers are forced to sell Bitcoin to hedge their positions, and that selling pressure pushes the price right back down. And on the flip side, when it falls below 87K, they have to buy, which pushes it back up. The result? The price gets trapped, just grinding sideways in this super tight, super frustrating range.
So, that's the cage. The big question is, how do we get out? Well, that brings us right back to the one date that matters in this entire story. The moment the lock on this cage is set to just break. December 26th. You can think of it like a massive release valve for all of this built-up market pressure. On this day, that $23 billion in options just expires. It's gone. And with it, all those dealers' obligations to keep hedging, they just vanish. Almost half of the gamma that's been suppressing the price is instantly removed from the system. And what happens then? Well, the gravitational force that's been pinning the price in place is just gone. The dealers don't have to sell into rallies anymore. They don't have to buy the dips. That magnetic pull of the $85,000 to $90,000 range we talked about, it just vanishes. So, of course, this leads to the million-dollar question, or, maybe the billion-dollar question. What happens once that cage door finally swings open? When you take a structural force this big out of the market, well, things could get pretty dynamic. So let's walk through what could happen. First, that structural selling pressure is just gone. That huge wall at 90K, it crumbles. But here's the kicker. The dealer's whole game flips. Instead of being forced sellers, they might suddenly become forced buyers as the price rises to cover their remaining positions. And that is the recipe for what traders call a gamma squeeze, which could fuel a rally even higher.
So once the price is finally free from this artificial cage, it could finally start moving towards where the math suggests it maybe should be. And some models, based on things like the power law, actually point to a fair value number around $118,000. The coiled spring could finally be released.
And if you look at where the bets are placed after this big expiry, the market is still screaming bullish. The biggest chunks of bets are piled up around strike prices at $100,000 and $120,000. It really looks like a lot of people are getting positioned for a significant move to the upside once this suppression is finally over.
So let's just wrap all this up. For weeks, we've had a market that's been mechanically held down by this massive option structure, and that structure is literally about to dissolve. Now, look, nothing in the markets is ever a sure thing, but the data is telling a pretty compelling story here. So the big question we're all left with is this the event? Will December 26th be the catalyst that finally unlocks Bitcoin's next major leg up? I guess we're all going to find out very, very soon.